Tomorrow it is expected that the monetary policy will announce whether they will cut the interest rate by 25 basis points or 50 basis points by critics. But yesterday, Bank of Thailand Governor Prasarn said that the central bank has room to be accommodative for interest rates to boost business and consumer confidence after the nation's worst floods in almost 70 years. The market has priced in a quarter percentage point reduction in borrowing costs at the central bank's meeting tomorrow, and the Monetary Policy Committee must do something different if it wants to have an impact, Prasarn told reporters in Singapore late yesterday. Any easing of monetary policy should be short-term and reversed once the economy recovers from the flood, he said. Thailand's industrial output slumped by the most in more than a decade in October as floods shut thousands of factories, disrupting supply chain production of multinational companies. The National Economic and Social Development Board last week said that flood damage may reach 300 billion baht as it slashed its forecast for growth this year. The policy rate has been at a level which is quite neutral, so we feel the MPC should have some space for accommodation if it is necessary, Prasarn said. We also have to admit that the flood has some impact on the confidence of businesses and consumers. If it is necessary, there is some flexibility that the MPC can accommodate to prevent any deterioration in confidence. The central bank left its one-day bond repurchase rate unchanged at 3.5% last month after increasing by a quarter point for 7 straight meetings. Thailand will cut its benchmark one-day bond repurchase rate by 25 basis points this week following Prasarn's comment. While Thai inflation in the short term is still on an upward trend because of supply shortages, such as results from floods and stimulative government policies, price expectations in the market have been quite stable, Prasarn said.
With the MPC meeting expected tomorrow, we are going to consult an analyst from the Kasikorn Bank. She is the Market and Economic Research Specialist, Capital Market Business Department, Kun Nalin Chatchotitham, on the line with us today. Sawasdi krab, Kun Nalin.
Sawasdi ka. Good afternoon.
Good afternoon. Kun Nalin, with the expectation that the BOT will cut the rates by probably 25 basis points tomorrow, do you think this is a means or the move by the BOT to stimulate the economy, and if that's so, would it work?
To a certain extent, yes. First of all, policy rate can definitely help to lift confidence in the market, both for businesses and consumers alike. And at the same time, it will help to lower borrowing costs by a little. At least, well, we think that 25 to 50 basis points is actually not much, but do note that the policy rate is already not very high compared to what we've seen before. At Kasikorn Bank, we actually expect a 50 basis point cut tomorrow, because if you look at the timing of the next meeting following November the 30th, the next one would be in January on the 25th. It's almost 2 months away, and we think that may be too late. But so by lowering the borrowing costs somewhat, I think it would definitely help to lift confidence for the market. And most importantly, it would help to quicken the recovery. The government side, they are planning a lot of fiscal stimulus, but if monetary policy side we do have further easing, it would definitely help to quicken the recovery a little bit. At the same time, I think that quickening of the recovery would also come in very importantly as the world economy is going through a slowdown.
That's right.
If we do recover quickly enough so that Thailand's economy is stronger by the first quarter or the second quarter, then it would be able to withstand any possible shocks or negative impacts from the Eurozone crisis or the slowdown of the U.S. economy.
Kun Nalin, what about the commercial banks helping their clients? Are there any debt forgiveness or interest rate cuts or extension of the loan maturity?
Yes, in fact, I've been seeing a lot of programs from various banks in various sectors like home loans, auto leasing, equipment leasing. There's a lot of extension of repayment period, or this is definitely helping to reduce short-term burden of businesses and households alike. And there are also programs with no interest grace periods. And for businesses such as SME, for example, some commercial banks have been increasing the loan size wherever possible so that clients have more liquidity to conduct their business more smoothly as well.
And with the flood situation coming into the recovery period, do you foresee a sharp increase in commercial banks' loans to the businesses dealing with construction?
Dealing with construction, yes, definitely. Definitely for the reconstruction period, the early periods of reconstruction. But for the overall system loans, I don't expect that next year's loan growth rate to be much higher than this year's. If you take a look at the year 2010 loan growth, it's averaging about 8%. This year it had been about averaging around 15.8 to 16%, which is pretty high. Next year, while we do require a lot of bank loans for reconstruction and government's infrastructure investments and all that, but do keep in mind that the world economy is going through a period of slowdown, and commodity prices and all that have been sort of decelerating. So putting those two factors together, I think next year's loan demand will still be pretty high, but I don't expect a double-digit growth.
Okay, so you expected this year 15% that you said. Is this after the floods or before?
This is actually before. This data is from January to September, actually.
All right.
I see, Kunalin. One last question. Overall,
Sure.
what about the extent that the banks have been affected by the floods?
Banks, business-wise, it is still a little bit early to tell. But on banks' asset sides, of course, you've seen a lot of destroyed ATMs, and banks definitely need to refurbish a lot of their affected branches. Well, profitability-wise, I think we might see lower profitability in the early periods of the reconstruction and recovery in the aftermath of the floods because of the higher NPLs.
That's right.
And also, closer to what I've been working on is export and import transactions have been lower recently because of the reduced manufacturing and exports activities. So, but I believe all those mentioned are very short-term impacts, and the overall banks should still be fine.
Okay, well, thank you very much, Kunalin, for your share of information.
Thank you for having me.